Hello traders and welcome to another non-farm payrolls live webinar brought to you by orbex.com. My name is Richard and I will be your host for this session. This webinar will be based mostly on technical analysis, more exactly on Elliott wave analysis cycles, of course, which is my specialty. So I will be combining multiple technical analysis tools such as structures and patterns, wave counts, channels, Fibonacci lines, divergences, and other advanced technical analysis tools. But before I do that, before we actually get into the intraday analysis, technical analysis, and technical analysis and so on, I would like to inform you that this webinar and this content has been brought to you for educational purpose only and does not imply an immediate investment advice. Please do acknowledge the risks involved if you would consider or could consider um, engaging in the markets. Okay, it's a risky thing, so you need to understand the risks involved. So with that out of the way, I will just continue with the actual content of this webinar. So firstly, of course, what I'm going to do with you guys, we're going to go over the charts here and take a look at the patterns, examine the probabilities for both bullish and bearish scenarios for this specific event, the non-farm employment change. So basically, we're going to do analysis before that, during the event, during the actual release of the data of the jobs in the United States. By the way, for those of you who don't know or are not really aware of the impact of this non-farm employment change, basically this is an economic indicator, and what I have here in front of me, it's an economic calendar right here, and the non-farm payrolls reflect the number of jobs added in the government sector of the United States, right? And of course, it directly influences the market and investors' confidence. Buy sells emotions, etc., due to the fact that when people have jobs, then the economy is fueled, right? So if more jobs are added, then of course the US dollar should gain strength. However, by the looks of this forecast right here for the non-farm employment change, a decrease would be expected as per these analysts' expectations, right? So not to mention that the average hourly earnings are expected to decrease as well with 0.1%. So in my personal opinion, this would weigh more, the results here, more than the non-farm payrolls, but the unemployment rate is expected to decrease. So this is actually a better sign. Overall, as you can see, according to this forecast, mixed results would be expected. Personally, and by taking a look at the charts, I would actually agree with this. Mixed results towards slightly a bearish sign, I would say, because there are some technical facts and points which I'm gonna explain further on. So basically, what we're gonna do today is we're gonna analyze the charts on the intraday charts. Mostly they will be on the 2 hour time frame, and then further on during the webinar I will explain to you guys basically during the event, during the release, we're going to stay and analyze some more, and according to the actual move we're going to attempt to predict what could happen in the market, what's the fate of the US dollar. The symbols that I'm going to analyze will be the dollar index, gold, silver, crude oil, euro US dollar, pound dollar, Aussie, Kiwi, yen, and Swiss franc. But also the indices, I'm going to stick around with the DAX on the European sector. But for the United States, I'm going to analyze all of them, such as, let's say, Dow Jones, S&P 500, and NASDAQ, right? So once we're done with the analysis and the NFP, for those of you who will stick around until the end, I have a treat for you. I'm going to do a full analysis on the Euro US dollar on the higher time frames based on the cycles, so you guys could basically pick my brain, and I will paint a bigger picture, yes, on a larger scale, both on, let's say, for instance, on the forex sector. I'm going to stick with the euro USD on a weekly chart, daily chart, etc. Also on gold, same thing. But most importantly, I will explain in detail what would be what could be expected, in my personal opinion, for the Dow Jones and the U.S. indices, due to the fact that I do see a possible spike in volatility coming, and I will actually show you guys for further on. So yeah, let's just start with this, yeah, with the volatility spike. Now, during the webinar, if you guys have any questions, you have the question box right there, so I will do my best to answer to you in due time. If not, then of course at the end I will take questions, so feel free to type in your questions right there. I will take a look at the questions box from time to time. Okay, so let's actually begin. Now, what I'm seeing here, let's see, firstly, I'd like to bring here forward the VIX, the volatility index, CBOE volatility index, which measures the volatility in the market. Now, this is a fear and greed indicator. That's how technical analysts call it. Basically, it measures the period of complacency. When the VIX is actually going down here, then people are complacent. They think that tomorrow is going to be just like yesterday, and they're complacent. They're buying stocks, they're buying everything. So basically they're in a buying euphoria, um, sleepwalking towards the edge of the cliff. Yeah, so when this thing actually spikes, market contractions occur, and we can actually see what happened there. Let's say, for instance, this is the weekly chart on the VIX. So the basically from the greed period or complacency period, it's spiked on the .com 2000 .com bubble, and then in 2007, of course, same thing happened, right? So in February, the U.S. indices took actually a hit. So I'm actually doing I'm working on a full basically a big report on this possible spike, and it contains all most of the markets, yeah, especially indices. So with this view, let's say for instance, what I'm personally speaking, what I think could occur is this being in February, the spike which occurred in February, to be the first one of of an ABC. So A, B, and then one more for a C wave, right? So if this occurs, then the indices could be in trouble, right? Now, zooming in on the 2-hour time frame, this is the first leg, which I'm labeling it as the first A wave, intermediate orange right here, and since then the contraction in ABC with an ending diagonal in the C leg, right? So from then, let's say recently, it started rising again, right? And it decreased as what appears to be an ABC correction in the second wave, minor red 2, in an ending diagonal with C waves. So an invalidation of such scenario would be this continuing further lower than this levels right there. Okay, so it can invalidate because if this would be a first leg, yeah, wave 2 should not go mustn't go beyond the start of wave 1. So but if this thing is correct and it will start a rally, it will be a wave 3. So it could be an impulse, in other words, which means that the spike in volatility could be on the table. Now, we're gonna go back to this later on. Yeah. So until then, let's just continue basically with the intraday analysis. Yeah. So I'm on a dollar index on the 2-hour chart right here. Okay. And what I'm seeing is basically, let's say, for instance, yeah, let me just bring forward to you guys right here what I'm seeing on the on the dollar index. Let me just bring this. So I'm gonna go on the daily chart first of all. Yeah, I mean it's 3:13 p.m. Eastern European Standard Time, and the data will be released in approximately 17 minutes, right? So for 17 minutes, I'm just briefly gonna explain to you guys a couple of things. So on the dollar index, I see this as a possible corrective structure, yeah, in a intermediate B leg, B wave correction. So in other words, this could actually commence a bearish impulse. However, the structures this structure could also reflect some sort of triangle formation, which would be a continuation pattern for further upside, right? But what I do know is that the dollar index could gain strength only, in my personal opinion, if it manages to breach 96 levels and create a new high, right? As we can actually see, there's divergences all over the place right there on this, so could be normal for bearish volumes to actually occur before a bullish divergence could push it up. So this is basically what I'm seeing on the on the dollar on the dollar index on the daily time frame. Now moving to gold, I I am labeling this as a flat correction in a complex structure in this B cycle wave black, right? So we have the first parabolic move, the dominant trend, which is wave A, and then complex corrective structures. Now, the reason why I'm labeling this multiples within multiples is because this is a corrective pattern which corrects this, and this corrects this. So you see we have a conflict of degrees and conflict of corrections, right? Hence the reason why double and triple freeze form right here, especially in this wave X, which is the primary X orange right there. So since then, when in February, so when the volatility actually spiked, right? We have um, we have basically the wave WX. How I'm labeling it, of course, it can be it can be labeled as a wave A right there, and then a wave B. And if this is true, then this would be 1, 2, right? And then the extension in the third leg, which means that gold would not really deliver this contraction anymore and just go directly to the 100% of W and X to project with the Fibonacci extensions right there, which is basically the level 1115. Very interesting right there. Okay, now I'm giving this a benefit of the doubt. It did break out right there on the weekly time frame, December 2016, December 2015 lows, which is a very bearish sign in my personal opinion. I would say I was actually expecting right here a possible bounce, so then it could continue, but it broke through and also broke through the weekly time frame right there. So yeah, it made a decision. It made a decision basically. What I'm wondering is if this, you know, if it has a bullish divergence, and it does look at it like it's actually having a bullish divergence at the 61.8, which is the golden ratio right here. Hence the reason why I put these boxes, right? So let's say, for instance, maybe this could commence a free wave structure in this corrective pattern before a continuation. Yeah, what's normally after a breach, it's normal for price action to retest that and possibly bump its head and then continue on the downside. But we'll see. We'll see. For that, of course, we'll move on to the lower time frame. So that's enough for gold. As for silver, there's a very complicated structure. I'm having difficulties with this one. It's very complicated. I'm labeling this as a triple free, as a very complex structure, WXY, and then a triangle in this X, and then of course would be A, B, C before a new cycle, a new parabolic move could even occur, right? However, the levels are are some points of interest in my personal opinion for bulls right here, right? The price is very attractive, but we're not going to focus right now on silver. We're going to mostly focus on gold as a metal. right? As for crude oil, also on the daily time frame, how I'm labeling this is as a complex correction as well in W, X, and then A, with a very complicated structure in this B wave as well, green B intermediate. So how I'm labeling this is as either as a running flat or expanded flat, of course, because wave B went beyond the start of wave A, right, red. So it can either be a running flat or expanded flat. Now, a running flat, right, would not go beyond the start of wave B, end of wave A, for this C. So this C would not go there, but an expanded flat could, right? So for that, I basically used the Fibonacci extensions from A to B to determine the possible end of C. As you can see, it's exactly at the 100%, right? It's enough to be considered as a running flat. If this thing breaches through, now the next levels would be 161.8 or 200, or basically this Fibonacci extensions right there. Sorry, Fibonacci retracements of wave A. Pretty complicated, pretty tricky by the looks of it. It could do that, but it needs to be monitored. The only confirmation would be if a bearish impulse would occur. This could be seen, of course, as a wave free, so could be an impulse, powerful impulse right there. We have 10 minutes until the release. Yeah, if you guys have any questions, of course, feel free to go, to type in the question box right there. Now, moving on to the euro dollar on the daily time frame. Again, complicated structures right there, corrective patterns everywhere. As you can see, the market right now, the market's location is indeed in a corrective piece, right? Corrective cycle. So what I'm actually seeing on the dollar is a possible head and shoulders formation, as you can actually see for this from this green um, um, arrows right there. Anyhow, what I'm seeing is a possible flat pattern in the B wave. Now I was looking at this. Of course, it can be. Let's say some people are looking at it as a wave 1 and 2. This first of all doesn't have 5 waves in it. Okay, to be considered as the first leg. However, let's just for the sake of it, let's just say this is indeed a 3, and this to be the 4 in a triangle. Yeah, so 3, 4, and then of course continuation 4, 5. Now the trick is, right, for conservative traders, okay, a breach of this trend line could confirm further downside. So in other words, 1.15, in my personal opinion, could pose as a significant support. So how I'm labeling this intermediate wave B correction is in flat pattern in this minor B inside it. So we have A and then W, X, Y, right? We'll see if that occurs. So that the pattern will be like this, let's say, right? Not all the way there, but anyhow, to be a flat pattern, right? Something like this. Now, if it manages to break through the lower time frame, it's a bearish sign. However, yeah, confirmation for further upside could come if it manages to show an impulse and a breach, right, and a breakout. And then of course, if it even gives a flag, a bull flag, that would be great, right, because that could confirm further upside. So it's a wait and see game right now with the euro, as with the dollar, with everything actually, because the market is in a corrective cycle. So there's not much to do but to basically try to have the best possible interpretation as a scenario. Pound dollar on the daily chart, I'm labeling this as intermediate A, corrective WXY in this B, and then a C, this C leg, the intermediate C red, in an ending diagonal, right, in which wave 1 is the longest wave, and all subwaves are labeled as a ABC, right, in an ending diagonal. So 1, 2, 3, 4, 5. As you can see, this in a descending channel, right? So not to mention that we do have signs of bullish divergence right there. So we'll need to keep an eye on this, right? This could be the day where the dollar could basically pick a direction, because it's about time, right? Now, speaking about the dollar, let me just go back on the dollar index right there. Yeah. Now, the point is that this corrective, this corrective structure, let's say for instance, yeah, wave A right there took about, let's say, 73 days, yeah, and oops, sorry about that. Okay, all right, and wave B so far took 48 bars. Now, for this to be considered a B wave for an entire correction, B wave took less than wave A did. So time-wise, it would contradict with the correction being over, right? Unless it's a triangle. But still, the possibilities are, in my personal opinion, slightly higher for this to commence a bearish impulse. But in the market, anything can happen, right? Same thing right here. If it manages to break out, then of course this could be an indication for further upside. However, in my personal opinion, wave A already hit the 38.2 minimum requirements for a wave A, right? And it could be over, right? So we'll see. Now, moving on to the yen, complicated structure right there. There's about 5 minutes left, guys, until the release. So I'm gonna need to continue this further on, but you get the picture so far, right? Even the yen is having this. I'm labeling this as a possible false breakout because it has a free wave move, and should this break out, it could go somewhere about this 61.8, right? However, same as previously explained, WTI, it can either be a running flat, so a continuation could occur right there, or an expanded flat, so this could have a breakout and then possible continuation before, so it can actually look like an expanded flat in this B, right? So then of course continuation, because larger degree patterns do point to much more upside for the dollar yen, right? So let's say moving on with the indices, short and simple, I have a full cycle here on the DAX, right? And how I'm labeling DAX right there is as a in a fourth wave correction, complex fourth wave, because wave 2 was simple, wave 4 could be complex because of the law of alternation in Elliott waves. So how I'm labeling this is as an ABC in this W, primary purple, then ABCX, and then AB, and possibly another drop, while the VIX would spike. We will see if that would occur. We do have, let's say for instance, something to look at right there as a possible head and shoulders formation. This would be the neckline, right, which is 11,650, 11,850, which was obviously tagged. And we do have this weekly trend line, right? From these lows, you can see where it's coming from, just like gold, right? It comes from way below and could be a nice support right here for a continuation. However, for me, the cycle waves green are ending. So 5 waves on the upside are ending, thus ending a super cycle black 5. So this is scary, right? I'm going to explain to you guys what I'm seeing further on. If you do stick until the end, then I'm going to go on these things and explain to you. Now, the US indices, I'm labeling them as in a complex pattern. I'm on the Dow Jones right here. I'm labeling it in a triangle formation, right? 2 more minutes until the release. So we'll leave this be for later on. Short and simple, if the VIX would spike, right? That's a bearish sign for indices. So Dow Jones could actually deliver. I'm just saying. This is my personal opinion, and it could really drop, just like it did in February, 3,500 points. That could happen again if and only if the VIX would spike. So for that, for us to see that, right? Now, we're not going to take a look at the economic calendar right there, right? And we're gonna see, basically witness the actual results, right? So let's just jump on the dollar index there on the 2-hour time frame. Yeah, short and simple. Let's say, because we don't have enough time, right? The possibilities for, in my personal opinion, according to this technical analysis, I could be wrong, right? But if I am wrong, then I do have other confirmations as alternates, right? As previously explained on the daily time frame. Now, we can actually see that gold is rising. Let's say this is a 2-hour time frame, right? So I do have some things in mind. I do see a possible bullish correction commencing on gold, and on euro, on pound, dollar. So I do, in other words, I do see, possibly I am seeing, let's see the results. Possibly I'm seeing some weakness in the US dollar, and a corrective pattern possibly starting on metals, on euro dollar, pound dollar, decrease on the yen. So we do have, let's say, for instance, unemployment rate 3.9, higher average hourly earnings, and non-farm payrolls lower, right? Mixed data, as expected, participation rate 62.9, bearish, and this bearish as well, right? So the only thing, this is flat as expected, and this, the average hourly earnings 0.3%. Okay, so it could be, I mean, could be mixed towards bearish for the US dollar as expected. So if we do take a look back, right, on the US dollar, on the 2-hour time frame. Now, how I'm labeling this entire correction, of course, is as an ABCW right there, false breakout right here in this B, and then an ending diagonal on this C. So W, X, Y, right? For now, I'm actually tagging this X as a top, right? Because it's a triple top, right? In my personal opinion. So you do have some tops right there, double top right there, and attempt rejected, boom, A. And this looks like a corrective piece for me, and how I'm labeling this is as an A, a B, and a C. I'm just looking for a bearish divergence. That's the best time to look for at the end of the fifth wave, or a C wave, right? So in other words, the metals, I mean, I could be on track right here with my technicals, with the expectations for gold and the euro to rise, and the pound, of course, right? Now, the tricky part about it, right? I would be satisfied. Let's see, I'm on the pound dollar on the 2-hour chart right now. So I would be satisfied with a proper bullish divergence right here on the pound dollar. So what if this could drop, tag the channel, right? Maybe break it a little bit and then go, right? So I would be happier and pleased with a proper bullish divergence at the end of the fifth wave. So I'm not going to draw conclusions right now, right? Now let's just continue with the analysis while the market is digesting this event live, right? Let's just make some let's just continue with the analysis, right? So the way I'm labeling gold, the drop, right, from that from this very complicated correction in a wave B, right? The way I'm labeling the drop is in an ending diagonal in which all subwaves, all waves subdivide in ABCs, right? So we have an ABC in this one, an ABC in two, obviously, an A, B in a triangle right here, 3, ABC, and then A, B, expanded flat, 1, 2, 3, 4. What if a fifth wave could occur? Proper bullish divergence on the table, so this green box could actually be at at hand, in handy, right? Now, another way to measure these waves would be wave 1 with 2 with the Fibonacci extensions are pointing me out towards the 100%, right? From wave 3 and 4, we have 61.8, not tagged yet, right? And 161.8 on this A and B. So as we can see, this zone is a vibration zone, the way I like to call it, and also meeting with the descending channel in the ending diagonal. If a bullish divergence would occur right here, the chances for gold to actually start that, I mean, revive a little bit, could increase. So keep an eye on it, right? I'm going to keep an eye on it, and then we'll have some more details, right? To be mentioned that previously in February, and this happened like a few times now since February, including February, of course, I've noticed something. When the VIX spikes and when the VIX actually rises, right? What I noticed is that the US dollar remains frozen, doesn't move up, doesn't move down, just remains frozen, slightly, I mean stable, slightly bullish, right? All else, everything else starts dropping, right? Gold is being affected, starts dropping. US indices, not to mention US indices and all global indices actually, right? Start falling. So the only thing, I mean, US dollar is basically at these times being treated as the new safe haven, in my personal opinion, right? So the VIX, in other words, could actually start that, right? The only thing that would be needed is this, so we can basically be over and done with this correction and proceed towards the next impulse, which of course is expected to be bullish as per the ABC bullish correction explained previously on the daily chart. Now, again, if you guys have any questions, type them in the question box, right? Now, moving along, right, on the, let's say, on crude oil, the way I'm labeling this drop, and of course this was actually this was actually posted. All of them were actually posted, right? So the way I'm labeling this is as an a corrective piece, and B, and possibly further weakness for crude oil. We'll see. The only invalidation would be basically above this high point, right? Which is above the 70.40 levels. Now, unless that happens, then the bearish scenario in my I will actually stick with this bearish scenario until then. So let's move on to um, the star of the day, basically the main attraction, which is the Euro USD on the I'm on the 2-hour time frame right here, right? So the way I'm looking at this piece is as you noticed on the daily chart, I was I was looking at it as an A and then B, C, right? I mean, yeah, but the correction. Let's say, for instance, if this is an even more complex, complicated correction, so I'm labeling it as a wave W turquoise minor degree, and then ending diagonal right here in this C leg for the W, and then on the upside, and even more complex because this correction is correcting this correction. So conflict of degrees, obviously we would expect an even more complex correction, yeah, due to the conflict of degrees. So we have a triangle right here, so A, B, C, right, X, and then another triangle right there, a running triangle. So we have an A, and then A, B, C, D, E, right, in this running triangle. So if this is the end, I mean the C leg, and to be honest with you, it actually hit the fibs. It honored the 100% from A and B, right? For this C leg to actually, for the piece de resistance, the last leg to be possibly be confirmed. So it met the requirements from a fibs perspective, right? We'll basically see. Now we do have, possibly we do have 5 waves on the downside, 1, 2, 3, 4, 5, right? This could be the impulse. Now, the things to look for, of course, if one would look for bullish scenarios on euro, yeah, would be the next intraday correction. Now, in other words, if this would do something like this, like a zigzag type of correction, or even a, let us say, some sort of a bull flag, right? This could indicate, I mean, at this vulneration, of course, right? This could indicate further upside, right? However, if this does this, yeah, and we have a pattern right there, then this could be the larger fourth wave, more downside before that. So as I said, I would like to see a better bullish divergence before I would actually decide on the actual pattern behind this very complicated structure. What I do know is that from A to B, euro dollar hit the 100%, regardless of how the structure looks, right? This is the correction. This is the first leg. This is the second leg. So we have a complete pattern right there. The next move could be on the upside. The only question is if this would continue further on the downside or not, right? So as some levels right there, let's say. Of course, the 1.158 would be in focus intraday, right? Short term. Now, for the medium term, let's say 1.15, as I said, it's important because a breach of it, and especially something lower than 1.145, could indicate more weakness. However, the structure is not really telling me that. It's telling me that it wants to jump, right, and finalize the bigger degree correction. It is a correction. It is a bullish correction. I do, personally speaking, I do see more downside on the euro dollar, right? Just not yet. Okay, I would like to see this correction finalized, over and done with, right? So we can move on to the next possible impulses. Moving along to the GBP USD, as shown on the daily time frame, I'm labeling this as ending diagonal in the C leg, right? So in other words, the structure looks like this in a descending in a descending channel in which all waves are divided as zigzags, ABCs, or complex corrections, etc. Right? So let's just take a look at this. We have wave one, right, in a descending channel as well, right? So we have wave one, simple corrective pattern in wave 2, red, minor degree with an ending diagonal in the C, minute blue, right? And then we started basically the downtrend, but not in impulses. It's an ending diagonal, so it basically presents it's a motive wave with corrective features. Hence the reason for the ABCs within each wave, right? So AB right there, C ending diagonal in the C, and then AB false breakout, right? And then ending diagonal. So this is one pattern, right? So basically we have A, B, and then again the C leg formed out of ABCs with an ending diagonal in it. So this is another pattern. Okay, this is wave 3. Now I would like to see, because for me to treat this as a 4 is not really enough, and I will actually explain to you why. Because of the law of alternation, wave 2 was a simple correction, hence the reason why I believe that wave 4 could sorry, wave 4, I would expect a complex correction, so something that will last longer, first of all. So this wave C is not out of the question for this wave 4. Yeah, short and simple. Of course, I would expect one more on the downside. We'll see, right? And a proper bullish divergence right here. So this is why I believe that pound dollar could have slightly more weakness ahead. Let's say, for instance, some levels, just to leave you guys with something below 1.2960 or even 1.2920. Yeah, that's an area to to look at and basically examine. Further on, Aussie dollar. This is obviously presents a complex structure right there. So if this would manage to break out, that would be awesome, right? That would be great, because if this manages to break out and also slides its way towards this channel, it could be bullish sign, right? If I do see that, then I would take a look at this 161.8 of A and the lowest point of B, right? Which is basically 0.76. So that's a long journey, let's say. That's something impressive, I would say, right? Of course, we need to take a look at the golden ratio right here, which is 0.7540 as some levels, right? But until there, of course, it could be an impressive impulse, right? NZD, same structure right there with an A and WXY right here. I don't know if it's even gonna deliver that. As I said, no proper bullish divergences on any of them, so that would lead me to think that the market could actually drop just to take everybody out before it goes, something like that. Moving on to the dollar yen, yeah. The way I'm looking at the yen is gaining strength if the VIX would actually start that spike, right? So of course it's a long process, so we need to be patient with that, okay? But the point is, let me just check something, guys. Okay, all right. Now, again, if you guys have any questions, write them in the chat box there. Yeah. Or having any difficulties or something, just tell me. Okay, so I'm seeing a C leg possibly coming. I'm seeing some strength possibly coming on the yen, and this is due to the fact that if the VIX actually spikes, I do see the yen gaining strength along with the US dollar, right? So the way I'm labeling this is, let's say for instance, this as a wave 1 and this wave 2. So I'm seeing possibly a wave C coming, a wave 3, right? So let's say this would be minute, right? Minute degree. So we will see. The only invalidation for this wave count would be something above the recent high point, which is basically exactly the 61.8 of this one, right? So again, um, something above that would invalidate that view, right? But so it happens that this is looking promising, let's say. Yeah, dollar Swiss, I am seeing possibly the same thing, and we do have a possible breakout right there of those small trend lines that I placed in the scenario in which it would include a ending diagonal in this C last for this B, right? So the way I'm labeling this is in a complex corrective structure, yeah, with a W right here from the time it actually started dropping, right? And I believe this was posted back then, of course, right? Even before, somewhere around, yep, okay. This was, of course, posted right there on those bearish levels before it started actually dropping. And you can actually see my views right there. But since then, things actually changed. But anyhow, the point is that it's interesting for the USD Swiss. So the drop, I'm labeling it in wave W complex, as you can see, yeah, and then the X wave correcting the complex structure, hence the reason why it develops multiples within multiples. So basically a double free, yeah, W, X, Y. So the X, let's say for instance we're done with that. Now again for the Y, multiples within multiples, W, X, A, B. What if the C will start? Hmm? We will see. The only invalidation, of course, would be something above the 100%, 161 point. It's a B wave. It is allowed to go beyond the start of A, right? But something above 1 point, I mean, something above 1.001, yeah, would invalidate this. But as it so happens, this is showing bearish signs right now, as a possible bearish breakout could really occur in this very moment live, right? So if I would see a bearish correction, small bearish correction, yeah, I mean as a flag, not even sure if it's gonna allow that, right? But it could do this, yeah, and then if we'll see that, then that would be the best, I mean the next best interpretation in my personal opinion. Moving along with the DAX, yeah. Now again, DAX is interesting right there because it's actually one of my favorite. I mean, it's my favorite EU in this, right? What is the basis of trading with Elliott waves? Good question. Well, look, Joel, I'm gonna help you out with something. If you would check, let's say, let me just see there. Okay, now I've attached some PDF files, which includes the ebook released for the Elliott Waves. Basically, it's some sort of like a learning educational course or something like that, right? So the basis of trading with Elliott Waves is, for me to put it in a simple way. I mean, if you guys want to learn, you can download the attached in this webinar. There's some attachments, right? Just check them out. Check some ebooks, right? There are 3 parts there. 4th one will be coming very, very soon and available. Now, to answer your question, Joel, it's very simple. It's a very good question. What is the basis of trading with Elliott waves? Well, the psychology behind using Elliott waves is basically very simple. It's Elliott waves reflects price action movements in which it's it reveals patterns on how the crowd goes from extreme points of pessimism to extreme points of optimism. In other words, it's a natural process in human beings buy sells emotions, right? And it reflects on the charts as patterns, multiple types of patterns. Of course, there are 23 types of patterns, corrective patterns, right? But the point is that regardless of how the market would work, I mean, along with, of course, it will unfold. It would unfold in that scenario with deviations, of course, right? If you know patterns, then you shouldn't have any issues. You're welcome, Joel. Okay, Joel downloaded it, the ebooks, right? Now, should you guys wish to learn this type of things, then of course my doors are open. I mean, Orbex is a good brokerage, right? So you can actually book a session with me, so we can actually go into charts, a private session or something like that. Also going to start some advanced sessions very, very soon, right? Gonna prepare for you guys a full video course with examples, explanations, etc. If you want to follow me on my articles, is right here on the Orbex blog. You'll find some of my articles, and I would recommend that you would, if you want to look more into my VIX, the volatility index view, then this article is specifically made for that, right? Not to mention that I'm working on, as I said, on the big report with one of my colleagues, which is actually very, very good at fundamental analysis. So together we will combine something on the trade war, right? Because what else could deliver such volatility, huge volatility in the markets, right? What else? Some fundamental event possibly coming from the actions of President Trump, right? Or something else even bigger than that, right? Like a banking issue, or yeah, so something, right? We'll see. We'll look out for the signs. Now, I explained basically what is the basis of trading with Elliott waves. Another question: which indicator is used in your bottom like MACD. Well, well, Jahid, it's not an MACD. It is um, an Elliott wave indicator. It's called bull trading Elliott wave, right? It's an indicator. I'm using this for wave confirmations, mostly for divergences, to be honest, right? So it's not, it doesn't reflect volumes or something like that. No, I'm using it for divergences and for wave confirmations. There's a certain way of using this, right? I'm not gonna go into it because it will take a long time, right? But if you wish to learn more, as I said, you can contact your account manager, just book a session, right? And we'll take care of it. Yeah, easy. Yeah, you make me laugh, Joel. Yeah, so Joel said something about President Trump's Twitter account. Yeah, that's the way he affects the markets right now. Do you share your ideas on trading view? Of course, some of them, not all of them. Some of them I keep them for my for clients, for friends, etc. Yeah. So speaking about this thing, right? Let's just continue with the analysis. So we went on the Aussie dollar. Yeah, let's go Kiwi. We went to the same thing. Dollar, yen, USD, Swiss. There are some patterns here, harmonics, right? Okay, so we have an AB equals CD right there. We also have a bearish bat right there. But if I do this, right? Let's say, for instance, this could be a harmonic as well, which could point on the downside, right? So you guys see how these things actually link together, right? So yeah, the way I'm analyzing the markets mostly is not in a fundamental way. I don't really focus on fundamentals. I only focus on big events. Yeah, and from a fundamental perspective, I just use fundamentals to possibly confirm my wave counts. Yeah, but it's all technical. Yeah, what do you mean? What do you mean, Jahid? How can I get that? What do you mean by getting that? Moving along. Um, the DAX, yeah, pretty interesting. Speaking of this non-farm payrolls and this drop, I'm very curious what's happening with the USD CAD because previously, yeah, um, my views were bearish on the US dollar or USD CAD. So let's say, for instance, this is back in April 20 on April 23rd. Yeah. Let's say, for instance, when I was like, my view was bullish at 1.338 right there with this one. Yeah. And bearish starting with 1.38. So if I load the new bars, we will actually see 1.338 went up exactly at the 100%, which was basically exactly 1.38, and then started to drop, right? You can actually see. So it's a long drop. I mean, there are some 1,000 pips there. Yeah, let's just measure it to see. Okay, let me put this there. Okay, yep, 1,700 pips. Yeah, then I stayed put. Had no interest in it because I didn't know if it's gonna uh, rise in an impulse, right? So again, I saw this corrective pattern, yeah, which could also lead towards an ending diagonal right here. So basically an AB, right? 1, 2, 3, 4, 5. If it even manage just to go up for the C leg, right? However, there's a red trend line right here. If it breaks it, in my personal opinion, that's bearish. So one more descending channel. This is easy. It's not hard at all, right? So these breakouts happen um, at key levels. Right here at the top, positive view, of course. Yeah, March 15 this year. Boom. Yeah, exactly there. Started going up. Sorry, started going down. Now, of course, there was another level, 1.34. It did start from there as well. The point is that until there, I viewed this as a possible end. However, it did this, right? Doesn't change the structure. It only delays it. It's also seen as a B wave. Even if it goes now here, I would also see it as a B wave. So, not to mention that it's going to have, in my personal opinion, a proper bearish divergence. But if it breaks on the downside, could become bearish. So, how can I? You mean the indicator, Jahid? Well, it's all over. I mean, it's just look for Elliott wave indicator. Even I mean online, or or contact me and I will give it to you. No problem. All right, moving along. We have the VIX right here. Yeah, I'd like to go on the indices. Yeah, because according to this data, the indices will be interesting to take a look. Yeah. So let's just continue with the Dow Jones. Now, as you guys can see, the Dow Jones and all indices, all US indices, I'm labeling them as a primary degree fourth wave correction. This, yeah. The reason behind that is because if I go on the weekly time frame, yeah, there's something interesting happening right here, and this is pretty important. Now, cycle waves, 1, 2, 3, 4, 5, black, yeah, 1, 2, 3, with an extension in the I mean third wave extension within the third wave extension. Fourth wave correction starting with 2015, yeah, and ending in 2016. And then the bull market returned 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5, an extension in the fifth wave. So fifth wave extension in the fifth wave extension in the primary free, right? This is when the VIX spiked back in February. And I previously did some videos in which I'm explaining that before it happens, before it actually happened. So it was a theory, similar like this one right now, okay? So in other words, I saw it coming. Now, what I'm seeing is this, the Dow Jones, possibly ending this correction in an impulse before continuing with the with the bull market. The problem is that this is ending a large degree cycle. So cycle waves 5 is ending a super cycle 5. And for that, told you I will have a treat for you guys. Let me just do this. Yeah, this is the Dow Jones chart, 104 years chart from 1914. Yeah, in which I'm labeling the bull market, wave 1, and then the sharp fall is basically the sharp fall is the Great Depression in 1920 1930s. Yeah, so 1, 2. Then the bull market revived with a 1, 2, 3, fourth wave. You can see the complexity of it. Also law of alternation, simple correction wave 2, super cycle purple, and complex and super cycle 4. And then the bull market returned 1, 2, 3, and then 4, 1987 Black Monday, right? And then 1, 2, 3, 4, 5, ending extension the fifth wave, right? So the market revived. And then this black cycle wave 5, the black 1, 2, 3, 4, 5 ends the super cycle 5, but also ends grand super cycle 3. So we have grand super cycle 1 red, 2 red, 3 red, 1, 2, 3 grand super cycle. Then the volatility kicked in, dot-com bubble, early 2000s, boom, W. Then the market revived, X, 2008, 2009 recession, wave 4 complete, WXY complex correction. Yeah, so again, law of alternation, sharp correction, simple, ABC, and then complex in 4, law of alternation. Now 1, 2, 3, 4, 5, are we there yet? That's the question, right? By the looks of it, I mean, I like to think that no, not yet. Okay, I would be satisfied with a proper end to this correction. Yeah. So basically, what would be to taking a look is, let's say for instance, let's just pretend that this would happen. Wait for 38.2 hit of free, yeah, which is 23,000. I do see 22,200, but hey, 23,000 default measurements for a wave 4. Yeah, 38.2, 23,000 Dow Jones. If it goes there, yeah, what could be the next? Yeah, well, pretty easy. It's the 61.8 for the wave 5 because wave 3 was extended. If it presents an extension, it could go even higher, right? Which is 100%. So let's say 29,000. We'll see. What if, right? What if 32,450? What if this bull market will not stop until 38,000? Regardless of what it's gonna do, the sentiment behind the Elliott waves point out towards a great bear market. That's my theory. Okay, whoever shares it is more than welcome to shoot me a message in private. So I'm gonna do a full report on this. It will include that. I'm gonna do some sessions. I'm gonna start some advanced sessions here with Orbex. So basically, you guys will be in for a treat because, yeah. What if I'm right? What if, right? For that, let's say for instance, I'm gonna continue with this. You're welcome. Trade wars, yes, exactly. There's volatility in the market right now. Anything could happen. Um, of course, yes, Joel, I agree. A correction is necessary to make a new all-time high. I completely agree. Yes. Now going on gold on the weekly time frame, weekly chart, yeah. Of course, we have this parabolic move, which I label as a super cycle wave A red. Yeah. So going up, right? So that's back when gold almost hit 2000. But the way it dropped, yeah. How I'm labeling this super cycle, grand super cycle wave B red is the following way. Cycle A black, cycle A B, and then 1, 2, 3, 4, 5 ending diagonal. So wave A complete. Now, according to the structure, and I tried taking a look at it as a triangle, but because it broke it, it invalidates the triangle. Yeah. So I'm looking at it as a flat, like this. It also broke through the weekly trend line, right there, the red one. So it could do this, yeah, as a complete pattern before further downside. Yeah. And this, in my personal opinion, could be, yeah, I mean, 2020, 2019 could be the actual top. And guess what? I mean, a cycle like this would take about 1 year to develop. Imagine the coincidence. Euro dollar, weekly chart. Same as gold, yeah? But the structure is different. The point is that this is a W, X, A, B, C. So a double free in this W. And the way it's correcting is in a W, X, Y, yeah, with this C. So we have a W. Now, the way it dropped, this could allow a free wave correction, bump its head in this long, long-term trend line, the red one, and could actually continue. And guess what? The French elections gap wasn't filled, so this could indicate that this vibration zone could be hit once more. But for that to happen, normally a correction would occur, possibly head and shoulders formation right there before an impulse. So it can actually continue. If it's even going to continue, we'll see, right? But until there, I know it's a long time, but just wanted to share with you my long-term views. Yeah. Again, if you have any questions, just write them in the chat box, right? So let me just continue with the Dow Jones there, right? For now, I'm labeling it in a triangle formation, right? However, this doesn't mean that it's not allowed to hit this 100% Fibonacci extensions from wave A and B, or whatever this is. If it's a W, X, and then this being a complex structure in a rising channel or something. Yeah, so this would be the Y and the B for this A. Yeah, so A and then complex structure until B. So we can project this with the 100%. We'll see, right? But the point is that this 100% is exactly at the vibration zone since the February dropped actually commenced. So the way this looks, I know, I would agree, this could actually go to 100%. Yeah, or 61.8 of this swing. So you see I'm measuring it already. So 61.8. Now obviously the vibration zone and the points of interest would be this blue box, right? If one would be conservative, if one would be aggressive, then um, of course that would be right there. So this view was actually posted. It's also on the Orbex blog right there. I told you guys should check the blog there, right? Yeah. Now moving on to S&P 500, structure is I'm labeling this as a flat pattern in this wave B, but in a complex structure, of course, right? So yeah, in a complex double free as well, minus degrees purple W X and then rising channel in a triple free. Imagine that, right? So as you can see, the volumes are, I mean, these are not volumes, but anyway, the divergence is typically there, right? So we can notice that the bulls could be running out of steam, and the present location, I mean, at this very moment, is exactly at the points of interest since the February drop actually started, right? So there is a vibrational level right there. Not to mention that this could even be a head and shoulders. Who knows, right? Do we have 5 waves on the downside? Yeah, I think so, right? So what if one? What if two? What if this manages to break out, right? And then bump its head right here and continue. We'll see. Whatever the scenario is, I mean, if conservative, let's say for instance, and looking for a bearish outcome, yeah, and you want to get some sort of confirmation, a breach of this trend line, yeah, could be a good sign if you're bearish on the S&P, right? However, if you're conservative again and you want to, I mean, you're looking for the top, right? Something like 2875 should or could give a bearish divergence, right? Or just follow the channel, right? Either that. But again, my views are to be treated as simple market commentary, guys. Please do acknowledge the risks involved. I'm only sharing with you my personal opinions, right? But again, if you do, how we done with NFP analysis, Mr. Moses? Well, it was pretty much right there, right? I mean, we analyzed the NFP, right? We're just discussing possible scenarios, possible future scenarios according to the actual market. But I'm actually briefing you guys with my latest views on this. So there's no major move, to be honest with you. So there's nothing really to take a look at right now. But this is what happened last time. So um, the market took some time to digest before the moves actually occurred. Yeah. On what circumstances do you take a sell position on indices? This, Joel, I cannot really answer it. Not here anyway. I usually get stopped out. You usually get stopped out shorting them. Main trend of most indices are long. In my personal opinion, main trends of indices is not really bullish, right? I mean, yes, of course, as I explained on the Dow Jones, I do see a bull market continuing, right? But depends on what your how your what's your strategy, how you use them. I mean, how you enter a trade. It's a delicate thing, of course, right? And what type of money management you're using. If you need help with that, of course, then just um, contact me. Give me a call or let's book a session or something. So yeah, we'll be more than glad to help you out with some views or some tricks and tips, etc. Right? Let's go on the DAX here on the on the daily time frame. As I said, I'm seeing a possible, this double top and possible head and shoulders formation. Yeah, and me and DAX were friends, to be honest with you. Let's say, for instance, back in May 12th, 2017, I was having a bearish view from 12,950 until 12,000. Yeah, and then of course, as you can see from the arrows, from 12,000 towards 13,300. So if I do load the new bars, right, this will only load it's not a trick or something, right? This will only load the new bar since the time of the actual post, right? So as you can see, 12,950, boom, drop towards 12,000. Then from 12,000 rose even towards 13,550. Okay, now moving along from there, after the drops, etc. No, this is not it. This should be here. Yeah. Okay. All right. So from 12,000, I had this bullish view from 12,000 until so you see, I had a view for the drop, had the view for the bullish side, and then more bearish side, right? And it went up, right? Bull market, and then huge correction during February VIX spike volatility return. So I was right. Again, it dropped, right? Again, right after that, I mentioned it possibly rising before more downside. So it did. Now, right here, with this view, I was saying maybe a bit more upside and then the drop to possibly start. And then it went upside, drop started. The way it started, the way this looks, not sure if I should put this here and just treat this as an ending diagonal in a descending channel, something like that. So this could be the C wave, in other words, A, B, C right there. So W, and then A, B, 1, 2, yeah, A, B, C, yeah, for a larger, even larger X. However, this would make the pattern taking way too long for a wave 4. Yeah, again, we'll see. But there's a way to it. Honestly, so sometimes by using Elliott waves and this type of things, you can actually be, you can have you can have a imperfect wave count, but still the direction could be good. That's the beautiful part about it. Yeah. So let's move along, right? So we're done with the daily time frames. I actually explained to you guys some views on the weekly, yeah, on euro and gold, and the view on Dow Jones as well, right? So yeah, let's go back to intraday, right? As I said, you can find me on the Orbex blog there. I do like to keep an eye on this VIX from time to time. I have some alerts right there post. Put for it. Yeah, we'll see if this USD CAD manages to break out. Yeah, and if the DAX, because the DAX in my, let's say for instance right now, um, I mean the view was bearish since then. So even on the intraday basis, I posted this. I usually do make posts like this, yeah. Posted this bearish view from there, yeah, at a termination of a wave B, yeah. So this start to actually unfold. Of course, that wave B, by taking a better look at the structures, became a wave X primary, and then WXAB. We'll see if the C occurs, right? But by the looks of this was rising in a channel, and it looks like it broke out already. Normally, I would expect a corrective pattern before more downside. So if I do have that, then I could be comfortable in saying, yeah, it could be turning bearish. So yeah, we'll keep on monitoring them, taking a look at them. Obviously, I am updating the blog post, my personal. I mean, this just you can find me there, right? And by the way, guys, for you guys who are actually left in here, yeah, you can find me right there, yeah. But I would like to, let's say for instance, if you did enjoy the content on this NFP, on this live event, on this live NFP webinar, right? I would very much appreciate if you would just leave your feedback right here, right? I mean, according to how you felt about the how the webinar was presented, the content behind it and so on. Basically what I did here, right? So leave your feedback there. I would appreciate it. Okay, awesome, says Moses. Yeah. We're gonna start some. We're gonna have these webinars also on a regular basis from 2 weeks. By the way, for those of you who downloaded the Elliott Wave ebook, put together by yours truly and Orbex, there will be a revision session, like a webinar in which I will answer questions and this and that for those of you who actually took the downloaded the ebook and are looking for answers on some sorts. Yeah, some upcoming content. As I said, I'm currently working on a report. Sorry. And it will be available very, very, very soon. Yeah, as I said, 2 weeks webinars working as updates and this and that, so we can basically keep the ball rolling. Some advanced sessions, this that. So makes basically some macro perspective similar to the one I did on right now on the Dow Jones, right? And obviously the quarterly report. Previous quarter report was actually released, so in June. So yeah, so this type of things will actually be available on a regular basis. So let's return right here on the dollar index. Nothing much happening, as you can see. I mean, this is not even a move, right? The market is not even digesting the NFP right now, the data, due to the fact that the data is indeed mixed, right? So again, we have a disappointment. I mean, slightly lower than the forecast, right? On the jobs, on the actual jobs added in the government sector in the United States, we have a decrease in the participation rate, but we do have a rise in the average hourly earnings. As I said, this is actually a good sign for the USD, and also a stable, I mean, unemployment rate decreasing, to be honest with you. So yeah, the data is split. It's mixed, right? It's basically up to the US dollar to pick a direction right now, and for me to leave you guys with something. Yeah, have these trend lines right here. They're placed here for a reason, because let's say for instance, if this goes right there and delivers this bearish divergence as I would expect, yeah, if it shows a 5-wave sequence right here, yeah, on a small time frame, of course, yeah. So if it shows a 5-wave sequence right here and then a 3-wave sequence right here on this, trend line. A breach could occur. A breach would be a bearish sign for this. If it breaches even, sorry, if it breaches even this one, then a larger degree correction could unfold here. If it manages to show that, I would be very happy to see. But the main thing is to give that bearish divergence. Yeah. On a alternate scenario, on a bullish scenario, yeah. Let me just answer a question. How about the Elliott Wave ebook part 4, which is pending? Yes, part 4 will be available for live account holders. Yeah. Yeah. So either that or join the sessions, and you'll have that as well. Yeah. But part 4 is specifically, I mean, is exclusive for part for basic for live account holders. However, after part 3, will be released, there will be a quiz which will be sent to those who downloaded the ebooks, right? This will be like a knowledge test or something like this. Is something for you, right? So from the part 3. Now, of course, that quiz, as I said, is to test your knowledge. Part 4 will be available for live account holders, and this is because part 4 is the most important one. It includes all the structures and patterns, corrective structures, the most important ones. This is what the market is all about. It's not about labeling an impulse. The market is about labeling correctives, labeling a corrective cycle correctly, right? Because, as I said, the corrective structures, they can subdivide into 23 different types of patterns. So, of course, Elliott wave implies using Elliott wave is fractal by nature, first of all, right? But it also uses Fibonacci's, Fibonacci numbers and so on. Hence the reason why I'm measuring the waves with Fibonacci extensions and retracements. But the point is that, let's say, the final test will be available only for those who downloaded, who have the part 4. And after that, a certification, Orbex will provide you with a, with a certification as well. Okay. So yeah, that certification will actually grant you access to more things, such as the closed groups sessions, private sessions with myself, and basically short and simple. Whoever is dedicated or with learning or establishing a business relationship and a profitable, I mean, possible profitable one, or just serious about it, right? Yeah, those guys can actually start working with me just by being serious and having an account with Worbex, right? No strings attached. So yeah, that's pretty much it. Now, as a bullish scenario for this dollar, right? If it manages to breach through the 95.55 tops, right, and these to increase right here. Well, if it even manages to go beyond the 96 levels, which is in my personal opinion, a big resistance, very big resistance right there. Yeah, if it manages to break out of that too, then how should I put that? Okay, let me go on the daily chart. This could just fly on the daily time frame. It could just fly away, and that's all the correction. That's it. Tricked everybody and just wants to go. But the confirmation, of course, in my personal opinion, a possible confirmation would be from 96, which is the 50% Fibonacci retracement of this primary wave degree A. So subdividing an intermediate AB purple and then extension in intermediate C, 1, 2, extension in 3, 4, and then the 5, right? So we have a five swings sequence in intermediate C, turquoise, this one, and free wave sequence in A, free wave sequence in B. However, this could be a leading diagonal, so it can have 5 waves inside it as well, right? A, B, C, easy. Yeah, easy to say. Okay, well, yeah, going back on the okay intraday charts. So again, 2 hours on the 2 hour chart on the dollar index, right? So as I said, this could be a pattern as an A. This could be another pattern, right? So A, B would lead a C wave, obviously, right? And this could be the next pattern for the Y, right? Like that. So A, B, C. So patterns and these structures are fractal by nature. They work together. They combine each other. They expand over time. They become more complex over time as well. It is a process. It's not. It is advanced type of analysis. It's leading analysis, right? But honestly, in my personal opinion, it works much better than lagging indicators, because a lagging indicator will only tell you what is happening in that very moment, cannot tell you what is gonna happen or might happen. So let's say, for instance, yeah, um, if you would look at this as a bearish, uh, as a butterfly, or yeah, bat, or as a harmonic pattern, okay, from this perspective, yeah, this will lead towards a bearish outcome, or could. We never know. I could be right. I could be wrong. What if I'm right? Okay, so we'll see. Moving on. Gold, yeah. Um, this already created a new low, right? So a new 1 year low. I think it dropped, you know, enough. But as I said, a proper bullish divergence would please me. That doesn't mean that this cannot break out. It doesn't mean that. It can break out, form a corrective piece, and just go until the next pivot. Yeah, which is, by the way, if it manages to break out on the upside, let's say 1260, 1280, 1304 even, could be the next stop. But of course, it could take some time because it is corrective. Yeah. Silver, same thing as gold. However, the structure looks a bit more complicated. Crude oil, a little bit. I'm not sure what to do with this pattern, if it's done or not. It looks like it is, right? It looks like it is like this, but you can also trick. So this can be an A, and this WXY, yeah, B, and then C. However, 100% right here, yeah. We can also use this. Let's say from A towards B, 100% for the. I mean, but I'm sticking with this current wave count for now, to be honest, right? So even if it does retrace this 50%, 61.8, should, if this is a 1, 2, and it looks like it's, I mean, this could look like an impulse, right? Nothing to say. But I was actually present right there, and I was present right here, okay, with some articles. So yeah, not to mention that on euro right there, I was looking for the upside, but since then the structure actually became complex. But just I was actually bullish right there. But when the patterns started complicating, then I realized that this correction is quite strong, right? So you see exactly what I so now I can do this. See, patience is indeed a virtue, and the fibs do carry high importance, right? So to be honest with you, if I'm right, yeah, we have 1, 2, and extension in 3, and then this fourth wave to be done. Then of course the next, I mean, how do you project it, right? That's the key. So you simply use, I mean, I'm going to use Fibonacci extension tool, yeah, and to project a possible 61.8 as a termination of 5. Because if wave 3 was extended, and it is, wave 5 should resemble wave 1 in duration and length. So these things are explained in the Elliott Wave ebook, right? And also will be available in the video course, which is coming up very soon, right? So anyhow, just to leave you guys with something here before we end this webinar, because we're already taking too much time right here. Okay. Obviously, if you wish to have a private session, speak with your account manager and set it up, right? Book it. So, for instance, on pound, US dollar, there's a strong resistance in my support, in my personal opinion, around 1.296 or 1.2920. Yeah. On euro, there is, as I said, there could be a strong support at around 1.150 and 1.145. Yeah. Aussie, honestly, I would be satisfied with because this is a B wave, so it can actually go beyond the start of A, no problem, right? But 0.73, I would be taking a close look at that level on Aussie dollar. So again, 0.73. New Zealand, something like 0.66850. Yeah. I mean, the previous low should be tagged in a wave B. Just a tip here. USD yen, I don't know. I mean, the yen is pretty much in a bearish stance right now, the USD yen. This is due to the yen becoming strong, and this is also due to the risk of events, right? They're happening all day. They're happening. I mean, sorry. They're simply, this is a risk off period, in a sense that the market is being injected with risk off events, with volatility. Hence the reason why I'm keeping an eye on it, on this fix, on the volatility index, because I'm monitoring this in order for me to have a clearer picture on the indices and also on the on metals, right? Because I've noticed that when the VIX spikes, gold drops, euro drops, dollar stays frozen, indices drop. So yeah, we shall see. But anyhow, for now, we're done for today. Thank you very much for attending. Don't forget to leave your feedback on the Orbex blog right there. You can actually find um, the post right there. So just guys, just leave me a feedback right there. If you like the content, just say a few words, right? If you like the webinar, I would very much appreciate it. So that was about it for today. Once again, thank you very much for attending, for joining. Feel free to join further sessions. If you have any questions, contact me directly. If you wish to take part in the, let's say, schedule a private session, do that with your account manager, please. And any questions you might have, just send them my way, or if you need any help. Do you have a Twitter I can follow? Yes, Joel, there are ways, of course. Just if you have connections to on the Orbex, just contact me directly, yeah, or yeah, send an email. Let's, if you want to start communicating, I'm available online all day. Either, you know where to find me. It's easy. So yeah. Now until then, yeah, we'll just leave it like this. The market, let's say, as a small summary, what could or would be expected. Dollar is looking like it's possibly gonna have a bearish divergence, so would be interesting to see a decisive moment indeed in the markets if if the 95.55 on the dollar index would or could hold, because I have some boxes right there which represent something that are used on the fibs measurements, not just placed there, right? So there are some points of interest right there. Now, yeah, that's about it for today. We're taking a long, this webinar took 1 hour and a half, so it's about time to end it. Feel free to join the further session. Once again, thanks a lot for joining. Until next time, how I like to say to all my traders, stay in the green and many pips ahead.